Hi, it's Jeffrey Cohen, President and Founder of Chicago Quantum, which is a service mark of U.S. Advanced Computing Infrastructures Incorporated. Here to talk today. I think it's going to be a little bit of a short call because it's Friday. It's been a really busy week, really long week, and I picked a topic that needs a lot of research, and I will say it's been too busy of a week to do all the research. So I'll talk about what I can and what I feel knowledgeable about. So let's get started. So from a firm perspective, let's start with Chicago Quantum. You guys know we're in the business of consulting to clients, and so we are well underway with our media and entertainment client. Thank you, by the way. It's great. We love that work. We're trying to figure out all the different data that the client can get from their environments, and then we're going to figure out how to map it to a quantum computer, as well as classical solvers, but mainly a quantum computer, and get a quantum answer. In fact, I had someone reach out to me possibly next week. We're going to have a meeting with an expert in a certain field, and they are known as being one of the top guns in terms of data. And maybe we can take their data and we can figure out how to map it, understand it better. And it's great. It's great. Just to tell you what's going on with our stock market portfolio optimization, you know, it's been a very interesting week. Pretty stressful week, because actually the one stock that the model picked that we've been following had a lot of ups and downs this week, and it didn't really make sense. So if you follow the stock, Summit Midstream Partners, by the way, just had earnings today, and but we'll get into that. Let's go back a little. Let's go maybe week and a half, right? Just to give you a feel for things. So the stock is bouncing between 24 and 25, which is not a bad price. It's been as high as 29 or 30. It's been as low as 10. And so, you know, you see 24, you think, that's pretty good. And then all of a sudden, middle of the week, it bounced to actually a low of $21.70. Right there at 11:10 a.m. on May 4th. Then, of course, it came back. It's a low-volume stock. It just doesn't trade much. But all of a sudden, you had a lot of volume. It looks like somebody lost faith. And so, you know, earnings are coming out. Maybe they figured buy the news, sell the earnings, except there wasn't any news. SMLP was about as tight-lipped as it can get with this earnings. And then, you know, finishes the week between 23, looks like between 23 and about 24-ish. And then all of a sudden, boom, they had the earnings call. I followed it and read the press release, updated our spreadsheet. And I've decided I'm going to show you our spreadsheet. Just now, I wasn't going to show anyone our spreadsheet. And so let's do it so you get a feeling for SMLP. And this is the type of work that we do when we work with a client and we start to think about, is a company worth it or not? And so earlier this week, we actually found a stock, trading opportunity, not specific to the Chicago Quantum Net Score model, but a good model. And I'm going to talk about what we learned, and we're going to bake it into the technology. And so it's not quite so manually intensive, which it was this week. So let's start it off. This is a spreadsheet that I started a while ago. I just redid the whole thing because new data from the quarter. So pretty much if you run one of these models, every quarter you take a look and you see what you can change. So start with equity. Common equity of SMLP is $188 million. Good number to remember, $188 million. And they have about 7.5 million shares. Now, I don't just look at Yahoo Finance. I'm going to show you what happens if you just look at Yahoo Finance. And I think you're going to be upset. when you take a look at just Yahoo Finance, because you're going to say, well, Jeff, those numbers aren't right. Well, no, they're not right. That's the whole point. So let's take a look. We'll go quarterly numbers. We'll take a look at the balance sheet. Maybe they got a number of shares. There you go. 6.1 million shares. 6.1 million shares. I want you to remember that number. Now take a look at the spreadsheet we put together. 6.1 million shares. Yeah, it's 7.5 million shares. Okay, that's like big number off. That's 25% off. Well, there's warrants, and there's already been a prospectus saying that the warrant holders are cashing in. And so there's another 666,000 and change. Then there's the shared from the preferred A, the exchange of preferred equity for common equity, another 560,000 shares there, give or take a few bucks there. And another 160,000 shares restricted were given to the executives. All right, we have 7.5 million shares. Now, at the last price I looked, which was $25.67, you're at 188 million. Okay, cool. By the way, I made a note to myself. I was off. Not anymore. Cleaned all that up. Okay, feeling good about that. Now, equity, there's not just common equity. There's preferred equity. So, Jeff, what is that? Well, the first is there's 143,000 shares of preferred stock from the corporate entity. Those trade at 60.9 cents on the dollar. So at par, it would be 143 million, but actually market value, it's like 87 million. Now the cost of that is based on the par. It's 13.6 million that they'd have to pay on the preferred. So right now they're not paying; they're accruing. They got a little notebook. They write it down. All right, 13 million. Check. I'm gonna pay that someday, or never. How could I never pay it? Well, I never pay it if I'm not going to pay a common distribution and I want to hold the money. I use that money to pay down debt. I use that money to maybe do a tuck-in acquisition, to quote the CEO this morning. By the way, love that expression. I used to use that at McKinsey all the time. We always talked about tuck-ins, and it was nice to see that. But so you got preferreds. 87.4 mil, another 13.6 million in annual cost, which they never have to pay. And by the way, they owe 19.6 million if they want to catch up and start paying common distributions. So it's okay. Just know another 20 million bucks out there. And then Permian Basin subsidiary preferreds. I actually had to call the head of investor relations, Russ, who was very helpful, by the way. Thank you, Russ, if you're watching. There's $93.6 million of preferred that's held by TPG, private equity, good solid money for a company that needed it. And that money went in part to pay for EE. So SMLP paid some EE. TPG invested for some EE in return for these subsidiary series preferred A's. And now there's bank debt. And so all of that is going to be paid back by the 70% that's held of EE pipeline by SMLP. The 30% that Exxon holds, they're going to do whatever they want to do. By the way you should think about this is that money from the EE pipeline comes online fourth quarter, starts generating cash, let's say the first 2 years. I would just assume all that cash is going to go pay off the debt. Bank debt, TPG debt, great. Pay it off. Eventually it comes. So this money is more senior than the common. So I just want you to think about that. Common, 188. That's what goes, if there's a bankruptcy, that's the end. That's after everything else is paid off. Then you got the preferreds, which is like second least senior. So it's a little more senior than common. And there you got, let's do a little, just highlight it, 201 million, round up. So total equity in the business is 369 million. So you think SMLP, 369 million, okay. I had some guy joking around on a board that they're only earning 12 cents. Made it feel like it's a dollar company, right? Well, just wait. So 369 million in equity, preferred and common. Now we get the debt. Now they just borrowed 4.6 million from banks, super cheap by the way, and they get to pay it back. Like you do with a mortgage. They pay a principal and they pay interest. I think that's great. They're going to pay this thing back. Everyone's happy. No one's chatting. So anybody wants to chat, just go ahead and jump in there. I think it's great. I'm hoping somebody does. Keep my eye on it. If you see my eyes go that way, it's because I'm looking to see if someone chatted. Then you got the revolver, right? And so a revolver is when a bunch of banks say, yeah, you can take money if you need it. Use it for letters of credit. Use it as you need it. Please pay it back. The cost there is around 3.5%. I model it at 4% because I assume interest rates are going up. And so you're talking about $32 million in interest costs. They owe $802 million. It's okay. Now you got the 22 seniors, $234 million outstanding at par, trading at over 98 cents per dollar. So it's like $230 million. It's 5.5% coupon, 14.3 million in annual interest charges. And then you got the 25s, right? They mature in 2025. And that's roughly 60 million, trades at 86 cents on the dollar. So still a nice discount, right? If you could buy that back, you save 14 cents. 223 million. I got the CUSIP numbers. If you're interested in learning more, you can go into FINRA and get all the data you want on this stuff. There's a little commentary. They do have a little cash. They have $16.233 million sitting in the bank. So unrestricted cash. So that helps. That goes against debt. And so all in, market value of debt is $1.243 billion. So now let's take a look. If I got 1.2 billion, 1.24, and I got another, let's say, 369 million of equity. So in total, it's funny, I never even put it in here. Let's put it in. This is total valuation. I use this somewhere else, but I keep calculating it over and over again. So we use market, we'll use market value of the debt plus total value of the equity, which by the way includes accrued distributions. You're at 1.6 bill. So think of it this way. I got a 1.6 bill company, right? No, there it is. It's 1.8. Oh, because I'm adding that cell. That's dangerous. Boom, there. Oh. There you go. 1.6 billion valuation. We're going to bold it. We're going to make it nice and big for you. And I want to explain why we care about this. So the whole company is 1.6 billion. All the equity, all the debt, if you bought all the shares, paid off all the debt, if you had 1.6, 13 billion in your hand, you could buy the whole thing. So what do you get for that? Well, you get very healthy EBITDA of $210 to $230 million this year, and probably going up fair amount as new wells come in. And there'll be new wells. The price of oil is up. Price of gas is up. It's almost $3 at the Henry Hub. Not forever, but it's nice. It is good macroeconomics. That's going to be helpful. And there's cash. They generated $51 million from operations, cash flow from operations, just like any other business. And a tiny bit of CapEx, cost reduction going on. Their free cash flow was $46 million for the quarter, and I've modeled it at about $190 to $195 million. So let's just round $200 million in cash, $200 million in EBITDA. So if it's $1.6 billion, I'm basically paying 8 times. 8 times cash or 8 times EBITDA for a business. A business that's probably going to grow. Well, I think that's a pretty good deal. And did a little bit of math just to see maybe, because pipeline companies should be valued based on the assets, because a pipeline is a very capital intensive. So let's take a look. And this all came from the quarterly financials. Looks like this, if you want to check it out. Press release. Summit Midstream came out this morning. I was reading it this morning before my shower. It was it's exciting reading. I jumped out of bed. I was so happy to see this. I'm actually not kidding. It is actually really good news. So let's take a look. What do we got here? I'll make it a nice font. I'll make it Arial. Nice and big, because I want you to understand the numbers, right? Let's go. So what's the valuation of this business? Is it a good deal? Like, if you think about it, 8 times earnings, all right, 8 times earnings, I can kind of get that, but what are the assets worth? What if I wanted to just say, you know what, I got 1.6 billion, maybe I just build the whole thing all over again. So the total assets of the business are $2.5 billion. Total liabilities, $1.5 billion. Close enough. The capital in the business is $1 billion. Now, all those preferreds we talked about, $272 million. Because I got to pay off the preferreds first. They're senior to the common. Now, the good news is everything left goes to the common. So why would you hold common? The reason you hold it is if there's $2 of value and they borrow $1, then whatever's left goes to the common. I love that. Right? You could have tons of value come. Now, it's the most risky piece of financing for a business, but it also could be the most valuable. So in this model, according to their quarterly statement, they have $750 million of capital, of value, of book value, including like 150 of intangibles, which is not that much at this point. So if I divide that by total number of common shares, including the ones they gave to the executives, including the ones from the warrants, all that, right? I'm at $100 a share. This business is $100 a share, $100.03. So what's it trading at, Jeffrey? $100. Trades at 25 and change. So I'm at 1/4 book. Feels pretty good. I'm at 1/4 book. I'm at 8 times cash. Not bad. Not bad at all, actually. So this is how you value SMLP, but then you got to look at, so where is SMLP? Are they in some corner of the United States where they're not allowed to drill? So let's go to Summit Midstream Investor Relations. This is always a good source of information. And honestly, I don't want to be writing their presentation. So I'm going to click on Investor Presentation from March. I got pretty pictures. We're going to take a look. So here's where they're located. Let's see if I can zoom in. I want to zoom in. Let's check it out. Okay. So they're in the Utica Shale Basin and the Marcellus Shale Basin. Now, Utica Shale, they just drilled, they had a customer that put one pad, 4 wells, 3-mile lateral pipe in the Utica Shale. One pad. This is little, right? Not a lot. 4 wells and 1 pad. They've never seen that kind of flow from a new gas well. This is great. And the flow is roughly equivalent to the 2.5-mile laterals that they just recently added from Q4. So this is actually kind of it's good. Where they are, the Utica Shale, the rock is good. It's healthy. It's got a lot of gas in it. Not much going on with Marcellus, Pissance, DJ, Williston, and Barnett. Oh boy, slow. But Permian Basin. this is where they're putting their double E pipeline in. The Permian Basin generates more oil and gas in the United States than any other basin in the United States. It is number one. Maybe it's 40 or 45% of total U.S. production comes from the Permian. And what's nice is that's where the double E pipeline is. It goes from right about where my cursor is, the Henry Hub. By the way, that's a national pipeline, series of pipelines that gets the pipeline east, that gets the gas out of the Permian Basin and where the customers are, the big cities. You need that. You need to get the gas out, right? And so double E takes it from north into New Mexico, probably right where the A is in Basin, and it takes it all the way down to the Henry Hub. I want to say it's like 135 miles. Thick pipe. It's 1.35 billion cubic feet per day. By the way, they just sold 75% of that capacity in long-term take-or-pay contracts. And they're in commercial conversations to try to sell the other 25%. This is terrific. God, if they could sell the whole 100%, upgrades, let's expand. It's probably easier to expand than it is to build brand new. So this is great news. Love to see this, right? Because it means new pipeline, lots of EBITDA, lots of money coming in. Eventually, they'll see cash as well, distributable once they pay off all the debt of building it. So this is where they are. They're all over the U.S. There's plenty of oil and gas out there. And so let's go. It's good news. And there is a growth story here. So what I would say is, I love SMLP. I'm long. Chicago Quantum isn't long because Chicago Quantum doesn't own stocks. Chicago Quantum is a consultancy. We own computers and we own office equipment. But the president is very long. SMLP has never sold a share of the current holdings and just keeps buying dips, buying more, averaging up in price to have a larger and larger holding. So that's it. That's the SMLP story. That's the financials. Now I want to talk to you about a stock that we found and how we found it. It may get a little complicated, so I'm going to walk you through best I can. So this is AMS. They lease hospital equipment, very specialized hospital equipment, to hospitals that don't want to pay $10 million a room or $30 million a room. They just want to pay by the drink, by the use. And so it's fine. It's fine. So let's take a look at this stock. So when you see a stock that looks like this, so it was up $4 or $5 years ago, to 2017. But it's been pretty flat since then. Pretty flat, pretty boring, almost no volume. And then you look and you see all of a sudden there's some volume right here in September. Not a lot. There's some volume here in June. And boom, all of a sudden you're looking at tons of volume. You're looking at 58 million shares traded like in the last couple days. There's a lot of volume. And so you look at the stock like this and you say, all right, interesting, right? I don't know if it's going up or down. I don't know if it's a pump and dump. I don't know anything about it. All I know is no volume. Early on there was some volume. Early on in June, 8 to 11 million shares. Then I look at September, 5 million shares. There was a big load that happened in December, end of December, 28th. When everyone's in the market watching really carefully, right? No, they loaded up. And so, looks like they took the stock up. Stock came down. And at 240, it's ready for a run. And so the second thing I did, see if I can show this to you. Probably could. Yeah, here we go. So I subscribe to Nasdaq Alerts. And the Nasdaq market, very, very good data. And they send you little messages. Volatility halt for VEL, Velocity Financial Inc. Trade halt notification for HE, Hawaiian Electric. Now, you don't know why these halt. You don't. You also get new IPO informations, but you don't know. So what I do, if I'm in the mood to find that runaway stock, that great stock that could make you just 35% in one day, I take a look at what's halted. Because a lot of times what's happening is, so let's say there's a chat room or Discord, or let's say there's a group of people and they want to buy up the stock and they want to drive it up. And their goal is to drive it up double, triple, whatever. They all get excited and they all hit the buy button. But then you have too many buy orders, not enough sell orders. Or the buy orders are coming in so fast that they overrun the tape. I've seen this. You get orders, limit orders entered for $1, $2, $3, $4, $5. But the stock went $1, $2, $2.25. And now it's just crazy. It's out of whack, right? Now, it's one thing if everyone wants to sell at 100 and the stock's at $1, right? Nothing happens. But if everyone wants to buy at 100 and sell at $1, like, it's broken. So the market gets shut down. So I look for those. And then I try to figure out what's happening, right? That's the hard work of actually looking at the stocks, looking at the picture, and saying, okay, this is what I did. Tons of volume. Wow. Probably loaded in June, September, December. Okay. I can see it tried to run up, and on very little volume, 1.4 million shares, this thing dropped. Now, this thing normally does a couple 100,000 shares, and actually last year, or 2019, was trading in the tens of thousands of shares. So this is not like a high flyer. This is thinly traded. But all of a sudden, I'm trading 50 million shares. And so you got to take a look. So the second thing I do is I open up Nasdaq's book viewer. And by the way, everything I've shown you so far is free. This costs money. You log in. It's $15 a month. It's not a ton. I just use the book viewer. There's other ones. And you take a look. So let's find something that's trading overnight, over after hours. Let's take a look at GameStop. Normally that's good for some action. Nope, not moving. Let's look at AMC. Yeah, not bad. We'll use this as a good example. So we'll zoom in so y'all can see it. So if you look at AMC right now, after hours, you will see that on just the NASDAQ exchanges, so this doesn't include IEX and this doesn't include CBOE. There's different exchanges. This is just NASDAQ, so it's not all the volume. It's not all the orders, but it's not bad. 209,000 orders are entered. 1.7 million shares to sell. Okay. 184 million shares to buy. Ooh, that's bad. That's like 9 to 1. So for every one share someone wants to buy, there's 9 they want to sell. And when you look, there are hundreds of shares for sale. 700, 7, 8, 14,000, 1,000. When I look at what's to buy, you do see someone wants to buy at 941. So if it drops a little, they'll pick up 3,000 shares. But then you got to wait till 939. So like they're going to buy at 941, they're going to buy 939. 933 is less than 500. Now you got to go pretty far down to 9.25. And the point is there's not a lot of shares. And so you watch this during the day. And I tweeted on this, by the way. So anyone who follows me on Twitter knew this while it was happening. All of a sudden I start posting that there are buy orders coming in at the dollars and at the 50 cents. Right? And so you're watching and you're like, wow. So there'll be 10,000 shares to be purchased at, use this example, at 940 and 915. Right? And maybe there'll be 100,000 shares in there around 9. So there was $1 million of orders in there in a second being executed when I looked at AMS. And I thought, wow, that's amazing, right? And so you can kind of see when it's slow. Now, by the way, on the sell side, there's always that nice list of orders to sell. So maybe they're selling every 5 cents, maybe it's every 15 cents, but you have to show a market. And so you'll see a lot of shares. Like right here, you see 14,267 shares at 970. So I would say that's a wall to lean on. And now you see another 1,000 shares and another 687 and another 500, 500, 300, 240. So the point is, you've got about $150,000, $175,000 at 970. So if you wanted to wipe all this out, you would actually just start buying. Buy, get me to 970 and hit up against that wall. So first off, I love this, right? Because you watch this all day, you see what's happening, you see the orders coming in, sometimes the orders get deleted. You're watching the volume. We're at 3.130 million shares. And like for an AMS, which I watched earlier this week, that number was going up like a slot machine. Loved seeing it, right? And so lots of volume. Then the question is it going up or going down? And so you start to, and I tweet on this, you start to say, well, looks like I see a lot of volume. Looks like it's going up. And that's what I'm talking about. So if you see lots of, like if you were watching now, see, this is stale. It's stale. I got 3,000 orders, 3,000 shares at 941. I got 4,000 shares at 939. Nothing's moving. This stock isn't going up. If anything, it's flat, right? It wants to go up. You can see it, right? I got one share at 946. I got like 405 shares at 950. So not a lot of shares. So you could buy your way up if you're willing to pay a couple cents more and more and more. So what I would expect to see if this market was supposed to go up, if it was being bid up, is it'd be fine to have the 2,000 shares at 939 and 3,000 shares at 941, but suddenly I'd see 3,000 shares at 943. And maybe another 1,000 shares at 945. They may not get executed right away because the ask is 946. You're putting a lot of pressure on that guy or gal with one share to make the sale. And so now you just start clearing inventory and you start buying your way up. Until you know you're going to have to get to this person with 14,267 shares. You're going to have to clear that. If you want to keep moving, you got to keep moving. You got to work through it. So you're watching it. So what I would say is, number one, find the stocks that had a high volume purchase back in the day. So maybe they were slow. Let's take a look at RHE. That was the other one that I called out earlier this week. RHE is about the slowest business in the history of businesses. RHE is senior living REIT. So it's not even the profit of making the money of running the senior homes. It's the real estate underneath the senior homes. Come on. That business is a dog. And if you take a look at the stock, you'll see you have to go back to 2018 for it to have done anything. And it's been a dog. $2, $1, $1, $1.25, pretty much up until December 21st. December 28th. Big buy. By the way, same date that AMS was purchased. And so now we see that somebody picked up, or they traded. Now, they didn't buy all of it. 36 million shares traded that day. I think the stock only has a couple million shares, right? 36 million shares. And then it goes back down to 2 million, 3 million, 13 million. So lots of shares traded hands. Like, I loaded the truck. And then it came all the way back down to $4. And I remember calling out when it was in this day and it hit $7, right? That it actually closed around $5, I thought. It was a lot of movement, right? And so this is when you start to see it. And so what I would say is, let's go back and look for a stock like this. It's like a $1, $2 stock. It's not moving. It's slow moving. And let's get in there. By the way, I don't see myself. Am I still streaming? Hey, Hope.
Yeah.
I think you've stopped my stream. Can you slow down your... can you pause your video for a minute? Holy moly. Yeah, you killed the network.
I'm playing a game right now. That's why.
Oh, darn.
I can go off.
I'm sorry. Yeah. Shoot. Let's see if it picks up. Yeah, whatever you can do, please pause right now, because it's... Okay. Oh, man, I don't even know when it stopped. All right. I'm just not sure. Error, YouTube is not receiving enough video. As such, viewers, okay, they're buffering. All right, so hopefully I'm still showing here. So, thank you, honey, appreciate it. So, net, we find a stock where people have loaded pretty flat. Just keep our eye on them. And then we look for a pop. We look for a price move, big price move. And that's fine. And we'll find it. I know we're going to find it because we look at all the stocks in all the listed markets in the United States. And we'll go from there. And that's going to get added to our technology. So the other thing I wanted to talk about was some of the work that we're doing. So we are working with DWave to improve the quality and capability of our models that run on DWave solvers. And I just wanted to point out the DWave Greedy package is one of the DWave solvers. It's the steepest descent solver. If you're looking for the bottom of a valley, you start at the top of a mountain and you take a step down. And you look, where is the steepest next step down? And you just keep going until there's no more steps down, that you're at the bottom, probably a local minima. What's happened is we've got this coded in, and unfortunately it's not giving us the right answers yet, the answers that we want, and so we're still working on it. We're also working on some additional embedding technologies. Let's see if I can find them. I've been getting rid of stuff, but different embedders. I'm going to find this. We're going to show you. Yeah, this is probably not bad. So one of the things we're looking for is a click embedder. So what happens is when you look for stocks, every stock can be held with every other stock. And so what happens is the DWave click sampler and the click embedder allows you to embed stocks where every stock can be held with every other stock. So if we're looking at 4,500 stocks, in theory that would be a 4,500 by 4,500 matrix with every stock being able to be held with every other stock. And we know that's too big, but we believe we can get up to almost 180, probably like 150, 160, fully embedded. If there's 100% yield, and since the DWave at this point is not yielding 100% qubits and 100% connections, we got up to 142. We felt good about that. And so this is one of the other technologies that we're working on. Let's see what else I want to talk about. You know, it's funny. I agreed to talk about inflation, but at this point, I might have to do a separate video for that, for the economics piece. I think I'm just going to stick with this update about Chicago Quantum. And, tune in. We're going to have another video, most likely sometime this weekend, where we talk about the economic information.